Donald Trump is back in the White House. His victory shocked many, but the stock market reacted with a bang. The Dow Jones Industrial Average soared past 44,000 for the first time ever. Investors are excited. They see tax cuts and deregulation on the horizon. Banks and private prisons are doing particularly well. The market clearly believes in Trump's ability to boost the economy, but not everyone is celebrating. The bond market is sending warning signals. Treasury rates are up, making borrowing more expensive. This could slow down the economy. The difference in reaction between stocks and bonds shows the uncertainty around Trump's long-term plans. Economists are worried. They fear Trump's tariffs and immigration policies will cause inflation. These policies could disrupt trade and labor. Higher prices for consumers might be the result. But for now, the stock market is optimistic. It's focused on the short term. However, those rising bond yields could spell trouble if they continue. Trump's 2024 victory was unexpected, but the stock market knew exactly how to react. Major indices hit all-time highs. The Dow Jones Industrial Average jumped by a massive 1,508.05 points. It closed at a record-breaking 43,729.93. The market's response was clear euphoria. The S&P 500 and Nasdaq Composite followed suit. These key indicators also reached new heights. The rally was broad. Investors believe Trump's pro-business policies will lead to growth. They expect higher corporate profits. The market's excitement shows a strong belief in Trump's ability to help businesses thrive. Certain sectors did especially well. Banking and automotive stocks surged. The market expects deregulation and a boost in consumer spending. Tesla, the electric car maker, saw shares jump over 14%. JP Morgan Chase, a major bank, climbed 11.5%. These gains reflect the belief that Trump's policies will benefit certain industries. Investors are putting their money on Trump. They believe his economic policies will bring back prosperity. The stock market's surge is proof of this. Trump's promises are appealing. Tax cuts, deregulation, and more American energy are all music to investors' ears. Trump's pro-business stance is a hit with investors. They think his policies will create a better environment for companies to grow. Lower taxes, fewer regulations, and infrastructure spending all point to a rosy future. Investors expect a surge in corporate profits and economic growth, but not everyone is convinced. Some analysts are cautious. They say the market's excitement is premature. They point to Trump's trade policies. Protectionist measures could start a trade war and hurt the U.S. economy. Trump's unpredictable nature is another worry. His lack of government experience could lead to mistakes and market instability. Section 4. Bond market signals inflation fears. The stock market is partying, but the bond market is worried. Inflation under a Trump presidency is, well, a real concern. Treasury yields have been climbing, and these yields are a key indicator of inflation expectations. Investors want higher returns to offset the risk of rising prices. Higher yields could mean higher borrowing costs, and this could hurt both businesses and consumers. So why is the bond market nervous? Trump's campaign promises are the main culprit. Tax cuts and infrastructure spending mean more money in the economy, and this could lead to inflation. His trade policies aren't helping either. Tariffs on imports from China and Mexico could mean higher prices for everyone. The different reactions of the stock and bond markets show the uncertainty surrounding Trump's economic impact. Some analysts think the bond market is overreacting. They say Trump's policies are still being developed and it's unclear how aggressively he'll pursue his campaign promises. The Federal Reserve could also step in. The Fed can raise interest rates to control inflation. Section 5. Long-term outlook. A mixed bag for investors. Trump's win has created winners and losers in the stock market. Investors are trying to predict which sectors will benefit most from his policies. Industries like banking, energy, and defense are expected to thrive. Their stock prices have soared, but healthcare and renewable energy are lagging behind. This shows how the market is trying to anticipate the impact of Trump's policies. Banking stocks are big winners. Investors expect Trump to roll back regulations from the 2008 financial crisis. He's promised to dismantle the Dodd-Frank Act, which imposed stricter rules on banks. Trump thinks it holds back lending and economic growth. Investors hope deregulation will lead to higher bank profits and stock prices. Renewable energy stocks tell a different story. They've dropped since Trump's election. Investors are concerned about his stance on clean energy. Trump has doubts about climate change and he wants to revive the coal industry. This has sparked fears that his policies will hurt renewable energy. These opposite reactions show how the market is picking winners and losers under a Trump presidency.